Hello, today we are presenting the strategic transformation plan for Foodex. Foodex starts from a strong Nordic position in processed meat, but its current model is under pressure because it's still too dependent on retail and on traditional meat categories. Our ambition is therefore to transform Foodex into a more trusted, more sustainable, and more profitable food player by 2027, with targets of 2.6 billion euros in revenue, 9% gross margin, and 8% EBITDA. From the external analysis, red meat is declining, while the best growth opportunities come from poultry, Finland, and adjacent categories like substitutes and ready-to-eat meals. From the internal analysis, Foodex has solid foundations, especially scale, brand, key account management, and supply chain strengths. But it also needs to reinforce innovation, customer insight, talents, and channel breadth. Our strategy is built around three horizons that enabling priorities will support to achieve. Defend the core, scale the adjacencies, and prepare future growth through ready-to-eat meals and growth through broader product range and stronger go-to-market execution. Overall, this strategy enables Foodex to almost double revenue and significantly improve profitability by 2027. Based on the starting point, we define the following vision and mission for Foodex. Foodex vision is to become the most preferred and trusted food source in the Nordics, Baltics, and beyond in Europe. To be the standard for food and nutrition excellence through innovation, brand, and competitiveness. To stand out for the best quality food and to achieve sustainable growth and become the first choice on the meal occasion. The mission of Foodex is to provide consumers and customers with safe, healthy, great tasting, high quality food products while building an environmentally and financially sustainable business. We then translated this vision and mission into a 2027 level of ambition with the following targets. Foodex aims to grow revenue from 1.3 to 2.6 billion euros, while improving gross margins from 6.6% to 9%, EBITDA from 3.9% to 8%, and ROIC from 6.3% to 10%. In parallel, the company aims to strengthen both its market position and stakeholder preference, with market share increasing from 27.4% to 40%, customer net promoter score from 50 to 65, employee net promoter score from 30 to 60, and recycled packaging from 70% to 90%. Overall, our ambition is for Foodex to become not only bigger, but also more profitable, more trusted, and more sustainable.
So, Foodex has been operating within a very focused playing field. Geographically speaking, Foodex has been positioned in Scandinavian countries only, such as Sweden, Norway, Denmark, but still not in Finland. Product-wise, it processes two types of meat. Red meat, which has been its historical core business, and poultry, which has been a secondary and growing segment. About the distribution model, it only distributes to retailers such as hypermarkets and supermarkets with no presence in food services nor D2C. So, today, Foodex has a B2B business model only. Now, onto the existing markets. We have two dynamics here. First, the largest segment, the red meat one, has been its largest in terms of size, but it has also been declining over the last years. In fact, we have a minus 3.2% CAGR across all countries, and on the opposite, the poultry segment has been faring much better, since we can see that it has a positive CAGR ranging from 2.7% to 3.3% in Sweden. Geographically speaking, Sweden has been the largest market in terms of size, and Denmark the smallest one. So overall, we can say that on its playing field, Foodex has a solid foundation, but with the red meat segment declining, it will have to adapt and think of new ways in order to compensate this declining.
On this slide, we assess the attractiveness of the Nordic market based on market size and growth. For processed frozen foods and vegetables, Sweden is the most attractive market as it combines the largest market size with solid growth. Denmark is mid-sized with decent growth, while Norway, despite its size, shows very limited growth. Finland is relatively small and only growing moderately. For meat and fish substitutes, the picture is different. Finland stands out, offering the best balance between size and growth. Norway shows extremely high growth but from a very small base. Sweden, on the other hand, is large but slow growing, making it more of a cash cow market. Now we highlight the key opportunities and risks across both markets. A major factor is increasing price sensitivity, which negatively impacts demand. At the same time, technological progress, especially in processing and packaging, provides positive momentum. In addition, competition is intensifying, putting further pressure on prices and margins. For frozen foods products, regulatory requirements such as food safety and labeling also play a role. On this slide, we assess the attractiveness of ready-to-eat meals and frozen desserts. For ready-to-eat meals, Denmark is the largest and most profitable market, while Sweden offers a solid and balanced profile. Norway is small but profitable, and Finland is the least attractive due to its size and margins. For frozen desserts, Sweden stands out as the most attractive market. Finland and Norway show strong growth potential, while Denmark is least attractive. Looking at trends, the ready-to-eat market is driven by convenience and at-home consumption, where price sensitivity puts some pressure on margins. In frozen desserts, sustainability is a key driver, creating growth opportunities through green products. Finally, in food services, Sweden is again the most attractive market, followed by Denmark, while Norway ranks last. Overall, increasing competition and buyer power put pressure on margins, so success depends on strong positioning and leveraging key trends.
Starting with the financials, Foodex shows a mixed profile. So on one hand, the company appears relatively solid on overhead discipline and capital efficiency, as shown by better performance than the benchmark on OPEX, working capital, and asset productivity. But on the other hand, the overall returns remain below benchmark because the real issue sits higher up in the P&L. The gross margin are weak, and this gap is visible across both red meat and poultry. So the key message from this slide is that Foodex is not fundamentally inefficient, but it does have an insufficient profit engine. Moving to the capabilities, the picture is similar. Foodex seems strong in the capabilities that help run today's business well, like brand, key account management, supplier relationship, and operational execution. However, the company looks weaker in the capabilities that are more critical for future competitiveness, such as innovation, customer insight, and talent development. Overall, Foodex appears well positioned to defend its current business, but less prepared to adapt its portfolio and compete in the next phase of market evolution.
After analyzing all of this, we have designed several strategic priorities separated in 3 time horizons. Horizon 1, so for the next 12 to 18 months, the strategic priority should be to defend core markets. Our core business generates 1.32 billion euros in revenue today, but we are playing defense. The red meat market, is shrinking from 2.78 billion down to 2.41 billion by 2027, and private label brands are eating into our margins. So what's our strategic rationale? Defend our red meat and poultry share across Denmark, Sweden, and Norway through 3 levers: cost efficiency, brand premiumization, and entering the food service channel, which we're not in yet. We have the assets to do it, 27.4% market share, strong key account management, and an established supply chain. Now, on the financial side, the total market is 4.7 billion, our obtainable share is 1.35 billion, and the incremental revenue generated from this strategy is essentially flat, but defended. Market CAGR is only 2.8%, and margins are 6 to 8%. So this is not a growth story, it's a cash generation story to fund Horizons 2 and 3. But we're not blind to the risks, and there are 3 key ones. First of all, beef core, cutting prices by 4%, the continued private label growth, and the overall decline of the red meat category. These are real threats, and this strategy is precisely designed to absorb them. Now, moving on to Horizon 2, so for the next 2 to 3 years. Horizon 2 is where we go on offense, and our first move is Finland. The point is to expand our core business into Finland because it is the highest potential adjacent market that we have identified, with gross margins of 10 to 14%, well above our core. Our strategic rationale is entering through a joint venture with a local food manufacturer. We're not starting from scratch. Our legal framework already covers Scandinavia, and our key account management and sourcing capabilities can be transferred directly. The incremental revenue target from this strategy should be 480 million euros. Now, on the risk side, they're real. Beefcore is dominant in Finland with a 44.8% market share. We'll also face recruitment and onboarding gaps and genuine unfamiliarity with the local market dynamics. This is why the joint venture structure matters. It lets us move fast while mitigating the local market risk.
Here, the focus is on entering the meat and fish substitutes market, which is already being shaped by strong health and sustainability trends. Consumers in this segment are increasingly shifting away from traditional red meat, as this creates a clear opportunity to position Foodex as a relevant player in protein-based alternatives. This is not just a trend-driven move, but a structural shift in demand where substitutes can progressively replace declining categories. What makes this space particularly attractive is that demand is already visible and there is early traction. However, the market is not yet fully mature. It still requires significant investments, especially in scaling production, cost optimization, and building brand credibility inside this category. This means Horizon 2 can evolve into a core revenue engine in the future, but only with a medium-term commitment. From a strategic fit perspective, Foodex is well positioned. The company can leverage its strong brand recognition, its established supply chain, and its expertise in protein-based products. These capabilities reduce entry barriers and allow for a smoother expansion into a decent market. At the same time, there are important risks. Competition, for example, is already intense, with strong early entrants like Golden Green or Voner. The market remains fragmented and evolving, and price sensitivity compared to traditional red meat could limit adoption. From a financial point of view, the opportunity is significant, with the market expected to grow at around 10% compound annual growth rate, reaching nearly 1 billion. The objective is to build and scale a competitive position, contributing meaningfully to revenues and supporting long-term growth. Horizon 3, on the other hand, focuses on entering the ready-to-eat meal market, which responds to long-term changes in consumer behavior. Convenience is becoming a key driver, and the ready-to-eat solutions are increasingly replacing traditional cooking habits. This allows Foodex to future-proof its growth beyond conventional meat markets, while leveraging its innovation capabilities and brand credibility. However, this market is at an earlier and more uncertain stage compared to Horizon 2, requires long-term investment and experimentation, and for this reason should be considered a small bet with high future potential. In terms of strategic fit, Foodex can rely on its R&D capabilities, strong product expertise, and a trusted brand in food quality. Those strengths are critical to develop innovative offering and to test new formats in a competitive environment. The company also benefits from its experience in managing key accounts, which can support distribution and partnerships. That said, risks are significant. Competitors already have strong innovation capabilities, resource allocation may be inefficient, and private label products are increasingly penetrating the market, putting pressure on margin and differentiation. From a financial perspective, growth is more moderate, around 3% compound annual growth rate, but the projected market size is large, and the strategic objective is to build a portfolio of new food solutions and to position Foodex as a future leader in a fast-growing and evolving category. Regarding our enabling priorities, we selected 3 key areas that directly addresses Foodex's main weaknesses and support its future growth. First, product innovation is critical. The core red meat market is expected to decline while demand is shifting towards alternatives and ready-to-eat meals. Therefore, Foodex must strengthen its R&D capabilities and turn them into a core strength enabling the company to continuously develop new products and format, remaining competitive and capture new growth opportunities. Second, data analysis and business intelligence is a fundamental enabler to do that. Currently, Foodex lacks strong capabilities in consumer insights and demand forecasting, and improving data capabilities will allow the company to better understand consumers, customers, and anticipate trends, and make more informed strategic and operational decisions. Third, logistic optimization, especially cold chain management, is essential to improve cost efficiency and operational performance. Given the company's high cost base and expansion plans, optimizing logistics will help reduce waste, improve margins, and ensure reliable distribution. Overall, these enabling priorities create the operational and analytical foundation needed to successfully execute Foodex strategy over the next 5 years.
If we look at the impact on the P&L, the message is very clear. Our strategy significantly improved both growth and profitability by 2027. Starting from the top line, revenues grows from 1.3 billion euros in 2022 to 2.7 billion in 2027. So we actually move slightly above the company level of ambition on 2.6 billion. What is important here is that this growth came from both the core business and the new growth platform. Indeed, on the core side, red meat maintains a major contributor and poultry grows, delivering an even stronger margin improvement. So, of course, Horizon 1, that we will see in the next slide, is really about defending the core but also making it more profitable. The real transformation came from the new categories, meat and fish substitutes and ready-to-eat meals. Meat and fish substitutes are 3 to 7 million euros revenue by 2027 and ready to eat 523 million euros. So there are not just growth business but also come with a stronger margin. This means Foodex is not only becoming bigger but also improving its business by moving into more attractive and higher margin categories. So overall, the P&L impact is that Foodex moving from being a traditional margin pressure meat company to a more diversified, scalable and profitable player. To summarize our strategic priorities, we have a three clear horizon logic. So Horizon 1 is about protecting and improving the core business, red meat and poultry. Horizon 2 is about building the next wave of growth, so through adjacent categories and expansion into Finland. And Horizon 3 is about preparing the future by developing innovative product. These priorities are supported by enabling action that strengthen the execution and also broaden the product offer. So overall, the strategy is simple: protect the core, build new growth engine, and create future value.